You can make a lot of money when the market goes south. In fact, some of my biggest profits happened because I used times like these to make a lot of money in the stock market. And I'm just a little cog in the system. A lot bigger investors have been doing this for decades. The biggest profits are made when there is panic and fear, because panic and fear create discounts, and discounts allow you to buy quality companies below their actual fair value. It's like getting an iPhone for 40, 50% off for no reason except people are panicking, right? But it requires strategy, patience, and understanding of some principles, which I'll explain in a second. So hang on there. It's not that simple. There's no quick fixes in this. There's no, hey, just do that, you're going to get rich. There's not just, oh, just buy the dip like crazy. None of this. In fact, I'm going to tell you that buying the dip is a little bit of a problematic strategy. And I know you're shocked to hear this from me, but I'm going to explain that and elaborate in a second. A lot of investors are considering maybe selling out of this market and leaving because it's getting worse and worse and worse. Maybe it's too late. Now, I'm not telling you to stay or to leave or to sell or to buy. That's not the point of this video. But there are a lot of people out there, maybe they're watching my videos and they've just recently started investing, and they bought Palantir and Tesla and Nvidia and all these tech stocks at the peak, and now they're down 30, 40, 50, maybe even 60% of their portfolio, and they're absolutely lost, not knowing what to do. Now, if you bought stocks on the way up at peak cycle because you thought stocks only go up, and you bought it because of the greater fool theory, thinking that this thing is going to go up, I'm going to sell it in a few months, going to make a lot of money, without understanding the underlying business, what these companies do, what these businesses are. If you haven't built a proper thesis for why you bought these stocks, then how can you hold them on the way down and buy even more if you don't have that foundation? It becomes very, very, very hard to be a long-term investor when you haven't done the work. It's like building a residential building, without proper foundations. The minute just a little earthquake comes, this thing is going to come down like Jenga. Why would you do that? Now, if you've done that, if you've invested without understanding the companies, investing in what you don't know, if you haven't built a proper thesis, now you're down a lot, 30, 40, 50%, you don't know what to do, you're panicking, sit back, relax, and breathe. I'm going to explain exactly what to do in today's video.
Well, markets are skeptical that the use of tariffs to rebalance global trade won't lead to either a growth scare or a reacceleration of inflation. And that's why you've seen the S&P 500 gains since the election get completely wiped out, and also international markets are outperforming the U.S. markets year to date.
The stock market keeps dropping. We have Bitcoin getting crushed. We have tech stocks absolutely getting hammered. And it's all because of Donald Trump and his tariffs. We have the NASDAQ down 11%. That's more than 50% all the way to the 20% definition of a bear market. The S&P 500 is down 5%, which is also quite significant. And a lot of people are worried that this isn't going to stop. And they're actually thinking we might be heading to a bear market. We have a lot of disappointment right now from Donald Trump saying, on the one hand, we're going to create a crypto reserve. People got hyped, Bitcoin went up. And now we found out that the crypto reserve is going to be based off of existing U.S. government seized Bitcoin that they get from drug dealers and all sorts of criminals. They're not going to be spending any dollars on buying new cryptocurrencies, which sent the stock market and Bitcoin down because everybody expected Donald Trump to pump the Bitcoin market with U.S. dollars. Not going to happen for the meantime. Now, on top of everything I just said right now with the tariffs, we had the jobs data came out, and even though it was pretty much as expected with 150,000 versus 160,000, not a huge difference. The jobs data was okay, but the problem is that the unemployment rate actually went from 4 to 4.1. And that little spike in unemployment that seems almost insignificant is a huge deal, especially in a very kind of fidgety market like we have right now. All of a sudden, we have fears of recession, unemployment, stagflation. All of a sudden, with tariffs on top, this is a very spicy soup. Now, usually, this thing would have been drowned out by what we've seen from Broadcom. Broadcom gave us great earnings. And the main thing Broadcom gave to us is the understanding that the CapEx, the capital investing cycle into AI, is at its peak. It's not slowing down. In fact, it's picking up. and Broadcom delivered great results. Basically, a lot of spending on AI. It's not going to stop anytime soon. On top of that, we know that Oracle and OpenAI announced they're going to buy 64,000 Blackwell chips from NVIDIA by the end of next year. That's a lot of dollars, a lot of money being thrown into this AI cauldron. It's not stopping, but because there's tariffs and all this noise and uncertainty, almost this Broadcom thing went completely under the radar. Nobody cared. Nobody cared, right? Now, I know that right now you're surrounded by headless chickens running around, mainstream media screaming at you, all this red, all this panic, and all you think about is the red in your portfolio. That fear, that panic is absolutely normal. Normal, right? But here's the thing. When you have a lot of panic, when you have a lot of people basically running around like headless chickens, sometimes maybe it's a sign of a bottom. But sometimes, maybe, it's a sign that we're just begun. I don't know which one it is, and I don't suggest that you try and figure out which. And that's my next point. If you think that this is a signal for the bottom, well, hang on a second. Before you rush in to buy everything, mortgage your house, take leverage, and buy like crazy, stop. 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 We don't know where the bottom is. We absolutely cannot time this. And let me give you an example. Back in 2021, Palantir was riding high at $35 per share. Palantir at $35 back in 2021. Nobody remembers that at this point, right? But then it dropped to $18 by December of 2021. So it took it a year to drop from 35 to 18. A lot of investors were convinced that this is the bottom. A whole year, it was dropping nonstop. It hit 18. A lot of people said, this is the bottom. And they went super hard in, right? And then for another 8 months, it continued dropping and it slashed another 50% off its price. And it went from 18 to 9, another 8 months. So now we have 1 year and 8 months of drops from 35 to 9. And at 9, everybody was certain that this is the bottom. 4 months later, it actually hit bottom at $6. So it took it almost 2 years to hit bottom. 2 freaking years. For all those people who were trying to time the bottom during those 2 years, they absolutely got smashed. They got hammered. But if they held, and they held through 2023, 2024, they've made a lot of money. But statistics, history shows us that most of these people sold out because they got hammered. They didn't hold. Now look, this time, what we're seeing is an $80 price tag. So nobody believes Palantir can hit $30 or $40 per share. Now, just a few weeks ago, I posted a video when the share price was $115, right at the top. And I told you, hey, folks, if you think Palantir cannot drop 50% in just a couple of weeks, you're delusional. It can, and there's a good chance it will. And if you cannot stomach that drop without flinching, sell 10, 20, 30%. There's no shaming it. There's no blasphemy in it. It's actually pretty smart. It's good risk management, especially if you're sitting on huge profits. If the stock keeps going up, you write it up, still invested heavily in it. And if it drops, you took out 30% and you've made a lot of money and you protected yourself by buying insurance. I told you how to do this. I literally gave you the blueprint.
I see zero issues with people selling 10%, 20%, 30% of their Palantir position just so they can say, look, if the stock collapses, I already took 30% off and I'm already covered.
Now, I hope you were subscribed to my channel. You're watching. If you haven't, it's a good time right now to do it so you don't miss it next time. And I put it on my YouTube channel. I intentionally didn't put it on Patreon, didn't put it behind the paywall. I put it on the main channel so that everybody gets to hear this, not just my Patreon members, not just my Academy members. And the fact that I was talking about it, people said, well, Tom, you're bearish. All of a sudden, you change your mind. I haven't changed my mind. I haven't become bearish, but I'm pragmatic and I understand risk management. And I told you that 115, which is 20x from the bottom in just a couple of years, hey, you might want to trim a little bit if you can't stomach the volatility. The only way that you stay at 115 was that you're me. And you're saying, well, I have a 10-year horizon. I don't really care. But most people are not that. If you have a 1 year, 2 year, 3 year, 5 year horizon, you got to risk and you have to manage that risk. I told you in that video. And the market is very similar to Palantir. Nothing has changed except maybe just the numbers and the tickers. Now, nobody can time the bottom on the stock market. Nobody can time the bottom on a specific stock. But there's a lot of money to be made. If you have the right mindset, if you have patience, and if you have a good strategy. Now, you can actually make a lot of money if you use those three things. And the way to do it is quite simple. I'm going to give it away right now. This isn't a plug for my academy. I'm actually going to tell you how to do it. If you prepare for the worst and you're saying, well, we're starting a little bit of a downturn, let's treat this as if it's going to continue 6 to 24 months. That means that we don't know when it stops, tomorrow, in 6 months, in a year, or in 2 years, which means that we need to have enough money to dollar cost average our way down for the next 2 years. If it happens sooner, it happens sooner. But if it lasts 2 years, we need to have enough money to do this for the next 2 years. Because we want to be here in 2026, 2027, when all the traders are saying, well, we're never going to make 20x on a stock like Palantir. Obviously, we couldn't have done that. We want to be there. We want to be able to say that we have a cost basis, which is ridiculously low in 3, 4, 5 years after the dust settles. Now, a lot of you don't know how to make sure that no matter how much money you're making, you will always have money to dollar cost average, and you will always have money to double down when the stock drops. In fact, I have a whole lesson in my academy dedicated to showing you how anyone, whether you're making 50K or 500K, you can do this. You can build a system where you have always enough dry powder to keep buying for 2 years no matter what. And the one thing I don't want you guys to do is pile in into the stock market, whether it's Palantir or any other stocks, without thinking about what you're doing. A lot of you are in this mentality, oh my God, Palantir is a $500 stock. Tom told me, at 80, it's a huge chance. It used to be at 125. Let's buy right now. Let's buy heavy. Let's mortgage the house. Let's take leverage. Let's go crazy. That is stupid. That is stupid. We don't know where the floor is. You can't pile in. And if you think that you can somehow time it, there's going to be a lot of bull traps that'll be set if we're actually heading down. If we're heading to 40, it's not going to be in a straight line. It's going to be a lot of things that are going to look like a bounce, like it's finished, like it's over. A few green days, a lot of dead cat bounces, a lot of bull traps. Some of them may turn out to be an actual spike. Some of them may not. But you don't want to test these waters. You don't want that smoke, trust me. So it's normal what's going on right now, the correction. It's normal. We had 2 years of insane returns. Palantir did 20x. The market did 60%. It's normal. No bull run lasts forever, and it's okay. There's nothing bad about it. Corrections are a natural part of life in the stock market. And you don't want to be in that group that doesn't understand what buy the dip means. A lot of people think that buy the dip means just go lump sum in right now and buy this. A lot of people got burned like this in 2008. In 2008, when the stock market crashed, it didn't happen overnight. A lot of people tried to buy the dip. They tried to buy after 1 month, 2 months, 3 months, 4 months. Eventually, they all got burned out of the market because it didn't stop going down. The only way to make money in a 2008 scenario was to keep buying slow amounts all the way down for years and years and years and years, and then riding it all the way up. It requires patience, it requires consistency, and a lot of discipline. But think about it this way. If you're buying small amounts, you're not going to be locked in at a certain price point, looking down a 50% drop, and you're saying, oh my God, so much pressure to sell. When you do a slow dollar cost average down, you're freeing yourself from that pressure to sell if it drops heavy. Now, look, this system of a fixed dollar cost average, buying all the way, and buying heavier when it's actually dropping below a certain threshold, along with consistency, along with patience. That's like 90% of long-term investing. If you focus on an index like the S&P 500, you pick a few good stocks which are generational companies, and you just DCA into them for years and double down on the downturns, you make a lot of money. But it's very, very hard. The discipline is so hard. It's so hard. People have a lot of trouble following this because after a few bad months, it gets very, very hard to keep holding and buying. Trust me, you'll see this in the media. Now, maybe Tom Lee is right and the best 10 days are just around the corner. I don't know. If it is, good for him, good for us. Let's go to the moon, right? No problem. But what if it isn't? What if it's wrong, right? How do you prepare for this? Well, you have to make sure that you have the right mindset for this. You have to trust who you're listening to. Pick trusted sources to get your information, your analysis. People who will give you the truth. No sugarcoating, no agendas, no echo chambers, an actual trusted source to give you information about what's going on in the market. You have to focus on the fundamentals of the companies you invested in. It's super important. And most of all, you have to filter out the noise from friends, family, media. All this garbage is going to come your way the worse the market gets. Look at the comment sections, how toxic they all become all of a sudden just in a few weeks, right? And you have to have that emotional barrier, emotional fortress. You can create it by surrounding yourself with smart people, with like-minded people, not checking your trading app every single day, letting it sit there for a week, 2 weeks, nothing will happen. Joining a community like ours, where you can be protected from all this noise, where you have lectures, where you have interactions with me one-on-one. You can send me questions. I always reply to everybody. Where you have a gathering 2 times a week, when we all hold each other's hands sometimes, because that's what we got to do in the academy. And we teach you guys how to do this for real, not to make 10%, 20%, but how to make the next Palantir happen. Of course, like Warren Buffett said, everybody wants to get rich. Nobody wants to get rich slow. If you guys want to get rich, filthy rich, slow, over the next 10, 15 years, join the academy. Paydium.com/Tom Nash. Would love to see you there. If you're looking for a quick fix, trading, selling, buying alerts, all this stuff, how to get rich quick, don't join my academy. It's not for traders. It's not for anybody with a time horizon of less than 5 years. If you don't have 5 years in the stock market minimum, don't join. But if you do have that, join the academy. Would love to see you there. I'll see you next one. Peace.